Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Welcome to another installment in our question and answer series. If you have questions about infinite banking, whole life insurance, put them in the comments section below and I can get to them next. Let's get started. First question is, if I am paying premiums, how do I also repay the policy loan? Let's start from the premiums. Okay, if you're paying premiums, let's just recognize right out of the gate that for someone getting started, premiums are going to come from a few different sources. One, you might just dedicate a percentage to get started, and if we're talking about a subsequent policy over time, of course, Nelson would say in his Becoming Your Own Banker book, just in case you're seeing this for the first time, he would say that premiums should eventually equal income, or your income should be premiums into a system of policies that you create and utilize over your lifetime. So you could just dedicate a percentage of your income, of your cash flow, such as it is, to premiums. What's another source of premiums? Maybe you do like Nelson did in the book and you have some honest introspection on your budget, on your spending, on your habits. Let's all check Parkinson's law, okay? Expenses tend to rise to meet our income. That's our natural human tendency. So perhaps we need to trim the fat, as it were. Perhaps there are some things that are not serving us, but that are receiving our dollars. So that is cash flow that could just simply be redirected. It's cash flow that we already experience or income that we already experience, but it could be redirected as premiums and or, of course, policy loan repayments. We'll get to that. Static funds. Often folks who learn about the infinite banking concept realize that the places that we've put money so far don't actually line up with our goals, our plans. It's locked away somewhere. There are penalties, there are fees, etc. And I'm not making advice here. I'm saying folks realize that they want to do differently when they learn about infinite banking and may decide, okay, I was contributing there. I'm not going to contribute there anymore. Maybe I will keep that, but I'm not going to actively contribute every time that I'm getting paid weekly, bi-weekly, monthly, etc. So that may be another source of redirection, a place where funds are typically going to be static and not so accessible, at risk. Lots of other features to consider there for the next 10, 20, 30, 40 years. Maybe I'd like to redirect that instead as premiums and or policy loan repayments. Some folks even decide to cancel, to cash in, to surrender, to get rid of other things, penalties or taxes included. Again, this isn't advice. I saw infinite banking in my young 30s. I was right at 30. So I decided that's not where I want to have my money locked up for the next 29 and a half years. Personally, that was a personal decision that I made. I wanted to be more active in using that money and not submit myself to the risk, etc. So static funds can also be a source of premium. So there are lots of sources of premium, okay? But once we have committed to premium, again, word of caution here, word of consideration. I would rather someone take a quality first step than try to run right out of the gate and trip and fall. And here's why that's why a relationship with an experienced infinite banker matters. Someone who's personally implemented this concept in their own lives. You should pick a premium that is worthwhile, and you're going to determine that. I don't tell people their numbers. You're going to determine what's worthwhile for you. It should make sense. It should be a logical number, a reasonable number. It should also be, or you should have the ability to pay an ambitious number, an imaginative number, okay? Because there is flexibility when it comes to the proper structure of a whole life policy from a mutual company that pays dividends. There should be a good bit of flexibility there. So you want to be able to pay something that's significant for you, that's actually going to move you towards your goals, and also have the ability to pay more than just a baseline. Okay, so there should be flexibility there. I'm mentioning that because we're all going to experience the ups and downs of life, what I call the obstacles and the opportunities of life. We're all going to experience that if we have flexibility from the start on the premiums that we plan to pay, can pay, have to pay. That matters, and it can play into how we're going to address repayments. All right, so let me use debt. It's a very common example. I got started with infinite banking with goal number one being to pay off student loans, car note, credit cards, etc. When you pay premiums and build up a cash value that you then leverage via a policy loan to go out and pay off, let's say, one of those credit cards. Do you, even following Nelson's principles of being an honest banker, do you have to immediately pay that policy loan back? No. But if you used a policy loan to pay off a bad debt, the monthly payment that you used to make for that debt is now freed up. So should it go directly back as a policy loan repayment? I wouldn't necessarily say so. It could if you wanted it to, but if you have another debt, you may also just decide, well, that's how I'm going to continue my debt snowball, is taking that monthly cost that used to go to somebody else, and now I can apply that to my debt snowball and go even faster. Oh, and future policy loans will do that as well. But could you also take that money that used to go to that credit card and stage that for future premiums? Again, I'm trying to lay out a multifaceted approach here because you should be becoming and positioning yourself to be your own banker. You get to decide, am I going to pocket that money for future premiums, that former credit card payment? Am I going to make a policy loan repayment? Am I going to pay additional premiums into my paid up additions rider to increase my death benefit, increase my cash value, grow it quicker, and increase the dividends that I can potentially receive? That's another option. So what I'm saying here is we should pick a premium that makes sense enough for us, that what we plan to use that policy for moving forward, whether it's getting rid of bad expenses, etc., should position us to be able to repay that policy loan from the insurance company as it strategically makes sense. So again, if you have a series of debts that you want to pay off, do you have to pay back any policy loan repayments whatsoever until those debts are paid off? No, you don't have to pay back. And perhaps you shouldn't. Perhaps you should just plow into that debt and get that paid off. Now, another word of consideration here, and I did not do this. I would even say that this was a mistake on my part. That's why I'm going to mention it. Also, here's a quick seed that I'll plant. I'm going to be releasing a general episode on the mistakes that I've made when it comes to infinite banking over the past 10 plus years. So be looking for that on the channel, or you can do a search for that. But one mistake that I believe that I made was I was so aggressive into paying off debts that I didn't hold as much reserve capital as I feel like I should have at the same time. Meaning, just because I have $6,000 in policy loan amount available, do I have to leverage all that? Do I have to use all of that? No, perhaps I should leave 1,000 in there. Perhaps I should leave 2,000 in there. Or I'm just putting out some random numbers. You should pick what those numbers are for yourself, but I would encourage you to consider, even if you need to do something aggressive like grab a down payment for the next property or to pay off the next debt, however it is that you're using your system, I would always encourage us all to remember the golden rule. He who has the gold makes the rules. So even if we're aggressively doing something short term, let's do so from a position of strength. Let's actually control some capital in that war chest for come what may, and who knows, right? If Parkinson is a law, and it is, his mean cousin Murphy also has a law. If something can go wrong, it very well may go wrong. Okay. So when it comes to paying policies, premiums, and loan repayments at the same time, I know, I can remember that particular hurdle in my mind, just a mental roadblock that I needed to work through. Oh, wait. All right. But in your life right now, you're already doing these things. You're already making deposits at a commercial bank. You're depositing money there. Also, if you have a mortgage or a car note or whatever, you have leveraged capital from somewhere else and you're making payments back, aren't you? So to find an entry point into privatizing banking, again, that's where premiums, finding an appropriate amount of premium that makes sense for you, comes into play first, because you can't build Rome in a day, right? So you don't begin to 100% privatize all of your banking immediately either. You should pick an entry point that you can pay premiums, that makes sense for you, and then also make loan repayments to be an honest banker as it makes sense for you. I hope that this is helpful. And I loved getting that question. It's a good one. When you can work through that, when you're on the other side of working through that in your own mind, it's a good position to be in. Next question that I have. Will there be a conflict? This is from a prospective consultation call. Will there be a conflict if I do IBC with you, Jesse, and am also doing velocity banking, or if I'm already doing velocity banking? No problem. I'm here to promote financial independence and autonomy. So my role is to be an agent, to share best practices, to help you look at your financial footprint and answer questions, speed up your learning curve around this infinite banking concept. If you're deciding to do X, Y, or Z also, no, that's what you're deciding to do, whether that's business, whether that's a particular kind of investing, whether that is whatever you're doing in your career, whether that is any other strategy that you're implementing. For me, I will say that those are two different animals. I recently fielded a discussion on actually infinite banking versus velocity banking. Jesse put that video in the show notes for the folks, where at our round table, we're discussing pros, cons, questions, concerns around infinite banking, velocity banking, compatibility issues, so all of it. But my quick answer, of course, is no, it's not a problem. If you want to be creative, if you want to do some particular math gymnastics, which those are my words, if you want to do some math gymnastics with velocity banking, as well as intentionally build your income, your cash flow as premiums into properly structured whole life policies from mutual companies that pay dividends because you want to become your own banker, you want to build capital there. Can you do both? Yes, you can do both of those. I would encourage all of us, though, to evaluate anything that we're looking to do, particularly financially, but I believe that these principles work everywhere, relationships, etc., fitness. Think long range. Don't be afraid to capitalize. Be an honest banker. Don't do business with banks where you think you're thinking. Let's start with this first couple. If we're thinking long range, where do I want my income, my cash flow to go? Where am I going to warehouse it? Do I actually want to warehouse it still with the commercial bank? No, I don't. No, I don't. That's not actually what I want to do. Now, again, if you want to do something in the short term because it frees up some monthly cash flow for you over the next 6 months, 6 years, sure, do that. Great. Awesome. You could do infinite banking at the same time. This is my perspective, and I'm answering the question that was asked of me. And I'm doing it here for everyone. And if you have questions, put those in the comment section below so I can get to them. But if I'm actually thinking long range, I don't want to waste any time in building value where I have ownership. I don't own the commercial bank. I don't want my capital to reside there. That's not where I want it to be built. That's not where I want to be building equity. That's not where I want to be building value that I can leverage. And I'm still leveraging with a commercial bank on their terms, with their conditions, with some form of collateral, okay? Whereas I get to acquire all of that for myself when I own a whole life policy contract. What's the collateral? The death benefit. My family's death benefit. What they're going to receive, income tax free, guaranteed. That's the collateral. nothing to pull out from under me. Okay, so when I'm thinking long range, that's where I want to be building that value. Also, in the here and now, this living benefit of having a cash value that I can build by paying premium into this policy. That's something that I get to leverage now, not with somebody's permission, not by filling out onerous paperwork and talking with the loan officer, etc. No, it's just a service form. It's a phone call. It's an email sent to the company to get access to compounding capital for my whole life in a guaranteed fashion, tax-free fashion. It's a beautiful thing. So if I'm thinking long range, okay, then I want to be doing infinite banking as my priority, as my baseline, as my foundational work, financially speaking. And then don't be afraid to capitalize. Again, where is my capital flowing? I want it to go to policies that I own and control. All right, let me leave that right there. If I need to walk that out any further, let me know. Next question, and I love this one. I'm actually still figuring it out myself, but I have an answer. Jesse, how do I share this concept with friends and family? I've probably done it all the wrong ways that I thought of to do it leading up to today, where I am coming up on 11 years of being exposed to this concept and implementing this concept. It's crazy to think about. More than a decade. When I think about this question, I remember what Jesus asked the lame man by the pool at Bethsaida. He asked him, "Do you want to be better?" He asked him a question. He was not well. Jesus is there and can do something about it. But he asked that guy, "Do you even want to be better?" So I'm a big believer that this becoming your own banker idea, this concept, it's like a seed. Nelson gave us a beautiful seed that we can share with people. Sometimes it's going to land on rocky ground and not spring forth, right? Not be able to take root, rocky ground. Sometimes it's going to land and a bird's going to come. A Dave Ramsey is going to come along and say, "Nope, whole life's worst place to put money." Okay. Sometimes it's going to land, spring up, wither from withering sunshine. Like life happens. I don't control the sun. You don't control the sun. Some life, okay, I start a policy and then, I lost my job or whatever, okay? Sometimes it's going to land on good soil and bring forth 30-fold, 60-fold, 100-fold from that starting point, that starting seed. Who's it going to land well with? I don't know. People get to decide for themselves. But I know that my role here is to share that seed. And then in my experience leading up to where I'm at so far, talk with me 10 years from now, it's going to be even better. It's going to be a great conversation. But how, tactically speaking, ask somebody, just like Jesus asked the lame man, if I could show you a way to, and then maybe try to say something there that will be impactful to them because you know this person. This is someone you like. This is someone you trust. And hopefully they like you and trust you. You could ask them, "Hey, if I could show you a way to keep more money running your small business, would you be open to that? Would you pay $20, $20-something to get a hold of a book and go through a book that I think could show you how to do that? If I could show you a way to leave a legacy for your family, a good man leaves an inheritance for his children's children." That's going to strike with people. If I could show you a way that I'm leaving a legacy for my children, would you be open to that? If I could show you a way to not be beholden to somebody else's time frames, timelines, or bleed out interest money. You know, the average American's bleeding out about 34.5% of every dollar that we earn on interest alone. If I could show you a way to keep that, would you be open to that? Okay. And then I've got a link to Nelson's book, The Authentic Book, on my website, durhamtalents.com. So I like getting the book in people's hands. I saw a presentation myself back in 2015. So I have a presentation video. I like talking about this concept. I was exposed to several light bulb moments back in 2015 when I saw a presentation from a fellow from the front of a room on this concept. And of course, that was a launching pad for me to get into the book. I was encouraged in that presentation to then go get the book and read that source information for myself. So I've got a presentation video also at durhamtalents.com and on a YouTube channel and everywhere else. You can share that with folks. So just get the information to folks and let them decide where they're at. And then Nelson says in the book, more's caught than taught. Lead by example. I just today had somebody ask me, and maybe this is another question, but I'm going to use this one to launch into the next one. I had somebody message me today, Jesse, would you be open to doing a group Zoom? I got my 2 daughters and I got my sons-in-law and I got my brother. Actually, I got these. I want to get my family together. Would you talk with them? I said, yes. Okay, so this is technically the third. Yes, all right, but here's my recommendation, okay, my suggestion to you, and also a requirement, okay? Here's the requirement. Everybody, before they get on the phone with me, needs to either read this book or watch my presentation video. I mean, it takes less time to watch my presentation video than it does a Marvel movie. It's, okay, it's not that big of a deal, but we need to have some baseline to be able to start from to have a conversation, okay? Nelson used to do a 10-hour seminar, y'all. Just a heads up there, okay? And this is a workbook. It says it in the beginning of this book. It's a work, and this is a very short, quick read. Large print. Not a bunch of pages. But it's a workbook, okay? So that was the requirement. And then my suggestion, of course, was, but also, friend, you're not a client yet. That's what I told this lady. You're not a client yet. I believe that more is going to be caught than taught. Okay. As a parent, I believe if you have children, we've got 4 children. Okay. 12 years old, 10 years old, 6 years old, not even 1 year old yet. For sure, more is caught than taught by these children. Okay, so we have to lead by example. So that's my answer to Jesse. How do I share this with friends, family? Just have a conversation with them about your experience if they're open to that conversation. Encourage them to get into the source material for themselves. And then, of course, you can always send them to durhamtalents.com where they can watch and listen to interviews that I have, client and colleague testimonials. I have series on my channel like the Encyclomedia series where I'm breaking down the parts, the aspects, the verbiage around whole life insurance and infinite banking. I've got the Myths, Mysteries, and Misconceptions series where I'm talking about just that because lots of folks, as Nelson says, their understanding of whole life insurance is based off of someone else's misunderstanding of whole life insurance. So hopefully, of course, the channel and the website is a great resource for all of us. Okay, next question is, Jesse, is this, meaning infinite banking, similar to, and then this person named a very well-known, big, profitable, large, again, well-known company. Now, I would say that this company has much more of a reputation as a recruiting company than it does as a company who provides a good or service. But again, very well known, lots of business going on. I'm not going to mention them because there are other things and other entities that we could insert right there, because as soon as folks are exposed to infinite banking, we're trying to, in our minds, go and connect some dots. Okay, is this like that? Is this like that? Okay, so apples and oranges, right? We don't want to be mixing those up. So for this question then of Jesse, is infinite banking similar to company, strategy, tool, financial tool, etc.? Let me give the same answer that I gave to David Stearns and Lee Barganier themselves on the Infinite Banking Initiative podcast where I was recently interviewed. That's the son-in-law and granddaughter of R. Nelson Nash himself. I said, for me, infinite banking is a paradigm. So it's a whole come from, it's a whole foundation, it's a whole world, okay? And then in that paradigm, there are these principles of think long range, don't be afraid to capitalize, don't do business with banks, be an honest banker yourself, rethink your thinking, prepare for windfalls, share the blueprint, as my friend Joe says it. It's a set of principles that you can consider and implement for yourself. Then there's a process. Well, what's the process? Banking. Banking. So is this comparable to a company? Is this, meaning infinite banking, comparable to a product? Is this comparable to this creative way of handling personal finance? No, it's banking. It's so very fundamental. We're all doing banking. We just don't realize it. We're not the one in a position of ownership and control and profitability. The process, though, is banking. And then the product that we're going to use for the process of controlling and profiting over the banking function in our life is a whole life insurance policy. So do you see where we're at in even getting to a product? Hey, Jesse, is this like some company or some product? Or we're so many levels deep. We're 4 levels deep here. There was a paradigm, principles, process. Now we're at product. So no, infinite banking is not like anything else. What it in fact is a way for you to become, and I believe it's the most efficient way, your own banker. Another question that I recently got from a prospective client was, Jesse, do you do live events? Do you do workshops? Do you have a subscription to anything? You got merch? Here's where I'm at. I speak on this concept of becoming your own banker. I have done so and am willing to do so live in person to expose folks to what is available to them, that they can be their own banker, that they can live and leave a lasting legacy through this infinite banking concept. I do speak live. I've spoken live one-on-one, small groups, family consultation calls where I'm speaking to 3 generations at once. Of course, I have ongoing client relationships. That's a different look. That's a different feel. Of course, when someone is already a client. Now, I do have some resources on my website while I'm thinking about this. On my website, durhamtalents.com, I do have what I call your financial footprint. So there's a document there that you can download, you can use privately. Of course, it's something that we can use together for our consultation calls. And it's a document that lets you see and visualize your current financial footprint. So it's something that should be updated and revisited regularly. I use that with clients. I use it with prospective clients as well, but it's available to you for free, public. You can go and download that there. Let me know if that's helpful. If you do that, I'd love to hear from you. Comment section here, or of course directly, because I have my calendar link at the website as well. All that to say, I do provide resources to the general public via this video format, of course, on the interwebs. And I do speak live with prospective clients and clients. That looks a little different for everybody, of course. Yes, I offer workshops. Again, we can do that at the one-on-one level. We could do that at the family banking level. And I offer certain workshops to clients only. If you want more information about that, let me know. You know how to reach me. And do I have any subscriptions or anything else? No, not at this point. I have over 1,000 videos where I've been sharing my best practices when it comes to infinite banking over the past decade here on the channel. If there's a video series that you've not yet checked out, that would be my strongest recommendation to you. All right, I hope that me addressing these questions has been helpful for you. If you have lingering questions, make sure to put those in the comment section below. Otherwise, you can find me and have a private one-on-one consultation call for free at durhamtalents.com. It's my hope that you live and leave a lasting legacy.